Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is June 1st, 2017, and this is the daily report for gold and silver. Following a ADP jobs report which came in well above expectations and estimates, we have seen some strength come into the dollar and a bearish slant on the precious metals markets, with the entire complex, except for palladium, trading lower on the day. Gold currently trading off about $6.60, putting it at $1268.80. Now, it had traded to a low of $1263.70 and a high today of $1272.80. So we have seen some resilience in the market as it came off of those lows, but nonetheless, it remains under pressure. As far as silver goes, silver also trading under pressure, but even more dynamic pressure than what we're seeing in gold. Silver currently trading at $17.28, putting it off about 13 cents on the day, but it is the low that's important to us at $16.98.5, because that effectively caused our stop to get hit this morning, and we pulled a pretty nice profit on our current silver trade. We'll go over that in detail as we look at our technical studies. Low today, as I said, $16.98, and the high on the day, $17.37. Market currently at 28, much closer to the high than the low. So traders, typically I will cover gold first, and if we're looking at silver, I'll cover silver after that. I'm going to change it up because we did have our stop hit on our current silver trade. If you recall, we entered our silver trade at roughly $16.32. That is right in this area. So it came in pretty much about 2 days after we hit the bottom and then began to bounce to higher ground. Market had a pretty substantial rise. Of course, we began to trail our stops up, and we did move our stop to just below, call it 17.10 on a protective stop. What I was looking to do was to keep it under these lows here, the low here, and of course these lows here. However, if you look at today's activity, and that is this single candle that comes in much like a hangman because it's after a defined uptrend, or it would be, of course, a hammer if it was found after a defined downtrend. But we had this tremendous range in terms of where the market closed and the intraday low, and that's following the ADP jobs report, which came in much higher than expected and really sent the precious metals under fire as the dollar gained a big spurt of strength. And that, of course, was in the morning. The market did recover. However, as it came down, it did knock us out, but it knocked us out with a pretty decent profit. So we're in at 32. We're going to mark ourselves out at 17.05 because I said under 17.10, which gives us a profit of 36.50 in terms of a straight profit on the trade. Not a bad trade for silver. And traders, as far as gold goes, we did see gold trade under pressure and close under pressure, closing off about $7.50 at $1268. 740 net change, off about 0.6%. Our current stop is under 1255. As you can see, when we look at the 200-day and the 50-day moving average, specifically the 50-day, because that is what we are really gearing our stop on, you can see that the 50-day moving average has moved up a little bit, now at 1256.40. You can use this as an effective tool to trail your stop up. In other words, if the market continues to track higher, you can always, by keeping your stop under the 50-day moving average, be able to trail it up and capture more and more equity on this trade if in fact we see this market trend higher. However, with tomorrow's jobs report coming out, we could see some real fireworks. The question that I raised in our opening letter was, if there was such a miss in terms of the estimate and the actual numbers for the ADP report, are we going to see the same thing for the U.S. Labor Department's report? If so, we could absolutely see some major pressure come into the precious metals markets. However, if it comes in on target or below expectations, less jobs being created than the estimate, we could see the dollar succumb to some weakness, and we could, in fact, or would, I would say, under that circumstance, see a fairly decent spike in gold, taking it to higher ground. And that is what I would look for. Since we don't know what the numbers are going to bring, my sense is that we have a stop in the market. If you want to tighten it, you can go ahead. If you're uncomfortable with basing this trade on how those numbers come out, because it will most likely affect this trade, you can go ahead and pull the profits that are there. Now, they're not that much. We're in at 64. You would get out here at 68, and you would pull about $4 on the trade. Add that to the 3,500 that you pulled when we rolled over, and you would have a nice little amount of profit over the last couple of weeks. But that is up to you. For the record, we're going to stand pat with our current stop placement and our current long position. In other markets that we look at, dollar strength and equity strength seem to be the prevalent trend that we're witnessing today. U.S. dollar index is staging a moderate recovery today, trading up about 0.3% at 97.16. When we go over to U.S. equities, which are just settling now, we've got some all-time record highs coming in on the Dow, the Standard & Poor's, and the NASDAQ Composite, all three. And this is the first occurrence of three record highs occurring on the same day, I believe, since March 1st of this year. 135-point rise in the Dow, closing at 21,144, a net change of over 0.6%. Standard & Poor's, about a 0.75% rise at 2430. And then lastly, the NASDAQ Composite, 44-point rise at 6243. Absolutely a new all-time record close. So traders, a very interesting close to U.S. equities today as we see all three major indexes close at new record highs. We're looking at the Dow Jones Industrial Average. This, of course, is a weekly chart. We'll go ahead and blow that up a little bit, and you can see this close represented by the upper level of the rectangle being above anything else that we have seen up till this date. We have noted the fact that we have been in this congestion area in which, although we hadn't seen lower pricing, we were unable to break above recent tops. That, of course, up until last week when we saw the market close higher, but not at a new all-time record high when we look at the intraday or intra-week move, I should say, that occurred, of course, back in March of this year. And that's the last time all three indexes closed at a new record high at the same time. That, of course, is the Dow Jones Industrial. When we move over to the Standard & Poor's, let's go ahead and pull that up. You can see that this week has absolutely moved head and shoulders above prior activity. Now, we did have a new record close last week, but that didn't occur with the Dow Jones Industrial Average. And then lastly, our composite index, and you can see without a question of a doubt that we are in new record territory at 62.43. Lastly, we did see some dollar strength come into the market. Now, the market closed up about 0.3% higher. However, it did close below the open of the day, and the open of the week. And that's why we're still getting a red candle. But this is a red candle for the week. We did certainly see some strength come into the dollar on today's jobs report numbers. So traders, no doubt an interesting day, some major bearish sentiment and pressure put on the precious metals markets. As we talked about during the technical study portion of our show, we did pull profits on our silver trade, about $3,600 per contract, which is a nice profit. It was about equal to the profit we took out of our gold position last week when we rolled over from current into our June contract month. We are still long gold. We are flat silver. And my recommendation is to maintain your current long position in gold. Maintain your current stop. We are flat in silver. We'll take a look at that after the jobs report, probably next week. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.